even this longer term chart really is still only $36,
Yeah.
which is right
But
up to
again,
these highs. So
yep.
that's definitely the sweet spot, 34 to 36. If we hit that, I have no doubt it's probably going to like pause and pull back. And that's probably where we could see silver cap out until we go through a bear market in equities and the recession clears itself out. And then I think after that, we'll see, precious metals. The next key target is 25.80 for gold. And then there's potential for it to rally up to the 27.40, but that's a little more out.
ChrisVermeulen, a noted market trader, highlights the potential upside in gold and silver prices using Fibonacci retracement and extension levels to predict future targets. According to Vermeulen, the gold market recently rallied, with an estimated 10% upside from its current price, making gold miners a potentially lucrative investment. As of the latest trading session, spot gold was priced at $2,411.36 per ounce, reflecting a 1.45% increase on the session and a 2.18% rise over the week. Gold is currently poised near crucial breakout levels and is likely to attempt to reach the $2,500 mark. Vermeulen sets near-term targets for gold around $2,580, with potential to reach $2,650 or even $2,740. Silver, exhibiting notable volatility but maintaining an upward trend, also presents significant investment opportunities. Vermeulen's analysis indicates immediate price targets for silver between $33 and $34, potentially rising to $36. Silver miners in particular show signs of breakout behavior, signaling possible robust gains. Complementing Vermeulen's perspective, Ole Hansen, Saxo Bank's head of commodity strategy, describes 2024 as the year of the metals. Hansen's Q2 outlook suggests ending the hibernation period for non-precious metals, implying a broader market uptrend. He emphasizes the critical role of central bank policies in shaping the trajectories of gold and silver prices. The inverse relationship between real yields and precious metals, and central banks' status as significant physical bullion buyers, underscores this dynamic. Silver's recent price action, reaching an intraday high of $29.73, is driven by its increased demand as a safe haven asset amid global uncertainties. This bullish trend in silver aligns with Vermeulen's assessment of significant upside potential. Join us as we delve into Vermeulen's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you, and enjoy the video.
Yeah, we've had that run. We had the big move up. We had the big pullback. It hit the 618. It consolidated, and then it went up and hit the 100% measured move. And now it's exhausted. It's kind of shaking out and consolidating. To carry it forward to where we are right now, we can just do the same thing. Let's zoom in a little bit here. And we'll take the most conservative weekly chart pattern. So we could go right here. We could go down here, but this is the most, we can do actually both. Let's do both. And then we can go down here to where this kind of longer rally took place, which this bull flag is a little bigger, which coincides better with a longer flagpole, the bigger rally. So I do like the low to this high and then down to this low. And this gives us those a few zones here where gold should run into some resistance. I think we could see this run up. We might see a little bit of a pause at 24.70. This is obviously going to be, I think, the next fairly clear target, which is 25.80, 25.70 area. That is 100% measured move based on the short-term pattern. It's also the 618 level based on the larger pattern. So that to me is kind of the next key target is 25.80 for gold. And then there's potential for it to rally up to the 27.40. But the monthly chart actually points to about 26.50, which is a little bit higher. So again, depending on the time frame you step back, how big of the picture you want to look for. But overall, it looks like we've got potential percentage-wise in gold from where we are as you and I are speaking.
10%, yeah.
Yeah, there's 7-8%, potentially 10% up to that 60-50, 26.50 area. So there's some pretty good upside, which means miners are probably ready to have a very nice move. I love this weekly chart on gold. This looks really explosive. I mean, 27.40 is not out of the question. That is what this pattern is pointing to. I'm just giving you the more conservative likely to hit. Take a look at silver. Silver is, I mean, it's really screaming to life. I find silver myself, I've always struggled a little bit more with silver just because it's so volatile. It's a little outside my comfort zone.
Chris discusses the recent price movements in gold and silver, noting a significant uptrend followed by a pullback and consolidation phase. He highlights the potential for gold to reach $2,580 as a conservative target, with further upside towards $2,740. Silver is also expected to rally, possibly reaching $34 to $36 per ounce, driven by breakout behavior and upward momentum. Despite volatility, silver's strong base suggests potential for substantial gains, especially in the event of a market downturn or recession. Chris anticipates a consolidation phase before a larger upward move, with $34 to $36 being a key range to watch for silver. Let's get back to the interview.
But it's screaming to the upside like the silver miners. It's more or less breaking out, other than this spike we had in overnight futures that one day where all the gold and silver both kind of went haywire for a little bit. But it is screaming to the upside. And silver, if we do a Fibonacci extension here, we can get a rough idea. I mean, we're looking at 33. Depending on where we take this, $33, $31, $30, or $34. And if we zoom back on the chart,
take that back and you'll see what 34 is, Chris.
Yeah, let's just go back to the weekly chart, get a better view.
Might have to go. There you go. Now look where 34 is on there.
34 is here, 35, which is yep. These major highs. We're also stuck, at these significant highs from 2020, 2021. So this is a huge base. You could say this is just a massive base. If it starts to break through here, the next stop will probably be 34 or 36, somewhere in that range. And then, if we have a bear market in equities, we go into recession, I do think, silver can muscle its way up, but I do think it'll probably consolidate and build a launch pad during a bear market or a recession. And then, of course, I think we'll be off to the races for a much larger move. And we can actually get a view of kind of where these rough upside targets are. Even this longer term chart really is still only $36, which is right up to these highs. So that's definitely the sweet spot, 34 to 36. If we hit that, I have no doubt it's probably going to pause and pull back. And that's probably where we could see silver cap out until we go through a bear market in equities and the recession clears itself out. And then I think after that, we'll see, precious metals scream higher. They'll be the first to bottom. I'm super excited for all this to unfold, but it's painful waiting. These are massive multi-year cycles and, economics. Things have to evolve.
According to market trader ChrisVermeulen, both short-term and long-term charts for gold and silver show strong bullish potential. This optimistic outlook is supported by current market trends and technical indicators, which continue to attract speculators to these precious metals. In early U.S. trading on Friday, gold and silver prices showed mild gains, with silver nearing its 3-year high from April, indicating robust upward momentum. As of the latest session, gold reached $2,391.60 per ounce, while silver stood at $29.965 per ounce. Beyond the bullish technical charts, geopolitical risks, including military and trade conflicts, are driving demand for gold and silver as safe haven assets. The financial system faces multiple risks, such as issues in housing, commercial real estate, rising bankruptcies, potential banking system collapses, sovereign debt crises, and currency crises. These factors collectively enhance the attractiveness of precious metals for investors seeking stability amid uncertainty. In this context, Vermeulen asserts that metals are expected to outperform the stock market in the near term, potentially over the next month or two. Let's get back to the interview.
If we look at the short-term chart really quick here, we can see very similar type of pattern using Fibonacci extension as what gold had. We had the low, we had a high, we had a pullback, and we carry that forward. And so based on that momentum, we had a strong move, the pullback, and it went right up to this 100% measured move. And now it's been dealing with, it ran out of momentum. That's what Fibonacci does. It says at 100%, that's where it should run out of momentum. So now it's building a launch pad. And now it looks like it's starting that run up and is starting to break out for another move higher. And based on this pattern, I mean, there is quite a bit of potential upside for the miners here, if we were to go from this low and take this big bull flag pattern and take this low and carry that forward, I'll have to shrink this chart down for us to see those targets. But you can see those upside targets are fairly significant up there. We could see GDX run from where it is right now, about 6-7%, all the way up, 17-18%, somewhere in that range. So this is a very nice pattern with a lot of momentum, I think, building behind it. I think we're in that market condition where money seems to be rolling into commodities, commodity or resource stocks. So this is the time, I think, for metals to shine and potentially dramatically outperform the stock market for a short window, for a month or two as we go forward. And as you mentioned earlier, Craig, if we take a look at the monthly chart,
yes,
and go way back in time and take a look at this huge pattern.
Yes.
I mean, massive rounding bottom. It had, it broke out of this base, this resistance area. Now it's been fading back down into support. And now it's starting to come to life for potentially breaking out of this falling trend line. And of course, those targets, which is interesting, if we zoom in, those upside targets, this 618 coincides with these two major tops.
Yep.
And the 100% measured move brings us right back up to the high of 2020, which my general theory is if a Fibonacci target coincides with previous highs, then there's very good chance it's going to have a pause or pullback. And of course, 100% measured move, when it hits that level and it's a previous significant high, you definitely want to be locking in some gains because there's a good chance it's going to get sold down fairly significantly for, a consolidation, a large consolidation before starting the next major leg up to the upside. So the charts are looking really good. We're close to resistance and breaking out on miners. And there's some pretty good upside potential.
2024 is expected to be a standout year for metals, with central bank policies significantly influencing the prices of gold and silver. The inverse relationship between real yields and precious metals, along with substantial purchases by central banks, drives this dynamic. What are your thoughts on the future of gold and silver? Do you believe they will continue to outperform the stock market in the coming months? Share your perspective in the comments section. If you found this video insightful, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.